Hi, everyone. Thank you, Sam. Welcome to another Sunday market update. My name's Jeff Pine, and I'm a senior trader with Actions to Wealth, who bring you this weekly Sunday market update each and every Sunday, unless it's Christmas. We have Sunday and Christmas. I haven't had that for a while. No, we have a Christmas holiday, a couple of weeks off during the year, but thank you for joining us, and we hope you get something out of this session, which, of course, will include Ash and myself. Ash in Brighton, just a little bit out of London, and myself in Tasmania, just a little bit out of Australia. No, it's actually part of Australia. It's across a bit of a strait that protects us from all the other Australians down here in Tasmania. Look, I think we'll just go straight to Ash and give him our sympathies, I suppose, for being actually a part of Great Britain, which you just shake your head, I guess, and say, well, mate, what's going on over there?
Oh, I mean, it's the big question. The problem is we've got a party that are in power that are infighting, and there's a direct split. You've got with a lot of these parties as they kind of progressed. Labour Party and the Conservative Party, the two big ones. The Conservatives on the right, Labour on the left. And as with many of these parties, what tends to happen is that you get a not far right faction, but you do get a right. They sit on the right hand side, and then you get the kind of centre right. And as modern kind of politics started to progress, more of the centre right and more of the centre left in the Labour Party started to gain some traction. And that's really what's going on. So we've got a direct split right down the middle with the Conservative Party, those on the right that really love Brexit and wanted Brexit to happen, that are supporting Boris Johnson, and those in the centre right that didn't really support Brexit. They're sort of, midway on it, and they are supporting Rishi Sunak. And of course, you've got, Boris Johnson, incredibly divisive, but probably their best hope of winning a general election. Probably might not be the case. We don't know what Rishi Sunak's going to bring to the party, but we know that
on that basis, they're probably likely to consider his reinstatement. Do you think
they are 50-50 currently? So wow. They need 100 MPs to vote for them to actually put them into the race in the first place. But apparently it's a 50-50 split. And what's currently going on is Boris Johnson is reaching out to Rishi Sunak to try and, strike some sort of deal. Now, Rishi Sunak was one of the main people that ousted Boris Johnson in the first place. It was him that sitting as the most powerful man after the prime minister was the one that said, I can't be on the same government with this man anymore because he's dishonest and he's leading the country down a path that we don't want to go down. So we are in an economic situation. There's economic situations right across the globe that the United Kingdom's probably worse than most, and Rishi Sunak is an ex-chancellor. So I think people would trust him. The public would probably trust him more than they would trust Boris Johnson. But as I say, mate, Boris Johnson's got incredible support because he's incredibly charismatic. And people forgive a lot of mistakes with people that are charismatic. That's just the way of the world. It's human nature. We saw it with Trump, and we saw it with many leaders in the past. Charisma does actually count for potentially, over 50% of popularity, which is unfortunate, but that's just the way it is. So Rishi Sunak, to be fair to him, isn't dull and dire and grey and he's got a character, he's got personality. So it's not that he lacks charisma completely, but Boris Johnson's on a completely different scale. So Absolutely. We'll see what happens.
Richie actually does comb his hair, I noted. Speaking of which, it would be very, very interesting if in let's say, I don't know, when's 24 would be the next federal election in the States. Is it actually possible that we could turn the clock back and have Boris Johnson and Donald Trump in power at the same time once again.
Everything's possible, mate. I mean, and this is the thing, Paul was asking me the other day, Boris surely hasn't got a chance, has he? And the thing is, you can't write these guys off. It was really to our detriment last time that we kept saying, no, this isn't going to happen. But you can't write them off because you don't know really who's pulling the strings. The people on the street don't decide what happens in power. And we saw it with the markets. Liz Truss came out with Kwasi Kwarteng with a policy announcement that the markets didn't like. The markets crashed. Yep. The bond market crashed. He was out within a day or two. She was out within a week or two. 10 days she was in power or something. Shortest ever living prime minister. So, shortest serving. Sorry, Prime Minister. So it's not us that decide. The market decided really what was going to happen within government. So when you look at that, when you consider that, you have to really understand who do business want. Who does business want in power? Because that will probably enable us to get closer to making a more informed decision about who would be there. Now, the fact that Truss beat Rishi Sunak in the first place suggests that they don't really want Rishi Sunak. So you can't write it off. You cannot write Boris Johnson off. He's got incredible support in probably the most important places.
Well, I guess we're going to see as that story unfolds and as we get closer to a decision on that. The FTSE maybe a little bit volatile, maybe the pound a little bit volatile.
Undoubtedly. Yeah, I mean, we got Monday's the day that we know.
Not that the pound's not already.
Well, exactly, mate. I mean, I'll show you sort of if we were to look through some of the data, and the data's quite interesting because what the data doesn't give us really this week is a clear idea of what's going on and what's going to happen. And this is the pound. So if we consider the pound, and what the COT data is telling us, this is the net position. So the net positions have been selling off. Now, this obviously is reported Tuesday to Tuesday. So the last 3 days of the week, particularly the last day, all of a sudden saw a rally in the FTSE, and it saw a rally in gold. It saw a rally in the Nasdaq, while the dollar was going in the opposite direction. So these guys were positioning for something different than what happened on Friday. That's the first thing to kind of note. Now, the question really comes in, if that's the case, does that mean that either they're wrong and they started to flip positions again between Wednesday and Friday, or even, from now until next Tuesday? Or does it mean the longer term picture is still intact and we should probably still be looking for short opportunities with things like the pound? And you could go through it and see the same thing. Look at the yen. Now, the yen's another interesting one. Big selling on the yen sort of Tuesday to Tuesday. But what we also saw with the yen was some policy which came and said that the yen has got a chance to start to rally. And, that also starts to flip around the COT data on this. But the COT data set says that the yen is still weak. Now, if we go to the dollar index, which is really, the behemoth and the one that we should be really looking at, it also suggests that it's relatively stable. The COT data is suggesting that the dollar is relatively stable. So the question really is, was Friday a knee-jerk reaction, or was it something a little bit more significant? Now, people are looking for reasons to get out of the dollar. They're looking for reasons to support the yen. They're probably looking for reasons to support the pound and the euro and other things as well. So other things against the dollar, gold included. So any little announcement that gives them a reason to do that, then they're going to start buying it up. Now, the only thing that I could see that would change the mood music a little bit on Friday was that Bullard, Fed Governor Bullard, came out and said that the chances are that there will be some change of the rate decision in 2023. So people are now positioning themselves for 2023. Inevitably, that the dollar, the speculation on the dollar is that the interest rate goes to 5% from the Fed. That gets priced in. Now they're looking for a reason that won't happen, or the 5% is the absolute ceiling. And if Bullard comes out and says that, then that starts to drive the market. So what we saw was a knee-jerk reaction. Sure thing, Lexi. Yeah. So the data is showing us that the dollar is still stable. So COT data showing us the dollar is still stable. The buyers are still really in charge of the market. You look at the yen, it's telling us that the sellers are not only in charge, but they are adding to positions for the yen, or at least cutting back even further on the longs, because this is the net position rather than long or short. And the pound is the same. So it's suggesting that the pound and the yen are seeing further weakness from the COT data. Euro, different picture, which is interesting, because if we are considering kind of going long on something against the dollar, the COT data would suggest that we should be looking at the euro. If we are considering going something against short against the dollar, the COT data suggests that we should be looking at the pound and the yen currently. So that's quite an interesting dynamic, that at least it's not all out and out dollar is strong. You know, what we're seeing is the dollar is around about stable. You know, the buyers are still in charge, but it's around about stable. Now you're sort of like saying, well, what's the weakest and what's the strongest? The weakest coming out looks like the CAD, looks like the pound, looks like the yen. So if the dollar continues strength, they're the ones that we want to look to short against the dollar. If the dollar is to start getting weaker, then we want to look at the euro in accordance to the COT data. The seasonal charts, unfortunately, give us a different picture. Actually, before we go to the seasonal charts, I'm going to show you the Kiwi. Again, Kiwi. And now these are down at extreme levels. Now, the one thing that is notable here is that while we're down close to these extreme levels, the next moves can be extreme in themselves. So the next move could be a hop. So what we might see in the COT data next week is it release. So all of a sudden the buyers came in. Now that doesn't mean that we have got confusion. Well, in a way, what it suggests is we need another week. We need another week before we can really hang our hat here and say, okay, the dollar's about to come down, and because it's got so much room, then there are opportunities for us to sell the dollar and buy up other asset classes like the euro, gold, silver, and possibly the Kiwi, because the Kiwi down at these levels suggests that a flip around could be quite extreme. The yen down at these extreme levels suggest that the flip around could be quite extreme. You know, these are quite big jumps in data when we get down to these extreme lower levels. So that could be sort of something to watch out for. It's not suggesting that is going to happen. It's just suggesting that that's something that we need to watch out for. If we are going to follow COT data, then it would suggest that we shouldn't be trading the yen long this week. If we're going to look for COT data, we could sort of like, you know, ease into the euro, but the yen and the Kiwi and the pound are out really for us this week. Now that does mean that we could miss an opportunity, but it also means that we could stay safer while we wait for the data to kind of catch up with what we believe, then look for opportunities. So waiting a week doesn't mean don't trade. It just means that look for those trades to potentially be a little bit more short term, because volatility could still be high. And then the following week, we could get a clearer picture. Then we could maybe put something that we put a position on that we can hold on to for a week or two or three or four. So that's what the COT data is telling us. Now, if we go to the seasonal data, is telling us that the Kiwi over the course of the next few weeks is relatively flat to moving higher. Now, I'll remind you that the Kiwi's COT data was weak. So what that is telling us is if the COT data then starts to bounce up, the Kiwi's a really good option to try and go long. So if we wait a week and wait for the COT data to kind of turn around and see if that's going to hold, because they've got plenty of days to buy. You know, they've got Monday and Tuesday as well before we start to see the result. Then we could have a bit more confidence that the Kiwi is going to pop to the upside. If we flip it now to the DXY and see what happens with the dollar, what tends to happen? It tends to strengthen up until around about the second week of November. Then there's a little dip. So we're sort of, again, we're getting close to that point. The seasonal data says don't fight the dollar. The COT data says don't fight the dollar this week. So you could be taking a position of slightly higher risk. So that means that you need to make sure that the money management is correct. Now, if we then look at the chart, we finally sort of like finish on the chart and see what the chart is telling us. The Dixie, the dollar index, last week hit a relatively significant bar, but we didn't break down. We're currently right along that monthly pivot. This is, if we go in accordance with the COT data, I mean, you look at the daily bar on Friday, very, very negative, but we are not through this trend line here. So we need to clear that trend line first. Now, really, what the cotton seasonals is suggesting is let the trend line break and retest over the course of the week, then look for opportunities next Monday. That's what that's suggesting. I'm not saying that's what we should do, but that's what that's suggesting. Bringing it in then and saying that, okay, if you were desperate to go this week, we didn't look at Euro seasonals, but the Euro seasonals aren't very strong either for the week coming up. You look at this euro, same sort of thing. This is an accumulation pattern down here with this inverted head and shoulders. And again, we're on top of the neckline here. So why would we trade this currently when we don't need to? We can wait for this to break and retest and then start to look for the upside. Because if the charts don't match what the data is telling us, then we shouldn't be trading it. What the data is telling us is that we should still be going short on this, but the chart is not really agreeing with that because of the very, very bearish move we had on Friday. So they need to line up. So if we consider the COT data, the seasonal data, and the technical picture right now, it's confused, and confusion tends to come before decision. So is the decision going to be, let's now sell the dollar off and allow these assets to start to grow? Or is it going to be that we are nothing to see here when we're back to where we were before? And while we're sort of here with the euro, that would also suggest kind of breaking down this particular level here. So there's a few things to consider. Yes, Lewis. Lewis is asking, will the midterms have any effect on the dollar? And yes, they will. What effect, we don't know. So that's the reason that we need the technical picture to kind of give us the idea of what the midterms are saying. The COT data is not giving us that right now. Seasonals aren't really giving us that right now. But what we have seen on Friday is a significant move. That was a decent move. Is it followed up by another Fed speaker coming out and reiterating the same thing? Is it followed up by a Fed speaker coming out and saying, no, that's just Bullard's decision, Bullard's opinion. That's not what's going to happen, because that could change things this week. And you need to now look at the fundamentals for the week and say, okay, well, what could move the dollar this week, and what's the day that we could start to see some price action happening? So patience is the key. I mean, I know we always say it, but I think particularly this week with things out of sync, patience is going to be really, really important, and it's going to be really. I think sort of this will define for many traders how professional that you can be, because being professional does mean that you wait for things to line up in your favor, or that you're very clever with money management and you can accept the chance of being wrong is quite high, without other things kind of lining up. But I kind of want something fundamental to back up what Bullard said, or the technical picture to back it up. And right now we haven't got either. So that's what we got, mate. That's what we got.
Yeah, cheers, mate. I think listening to you go through the dollar index in particular, I'm going tick, 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 and everything that the data is suggesting, which is just hang on for a minute, is lining up for me technically as well. And that'll be the first chart I look at in a minute. But thanks for all that, and
No problem.
have a wonderful rest of the day, mate. We'll catch up tomorrow in Trading Buddies, right?
Yeah, certainly will, mate. I'll see you tomorrow sharp at 8 in the morning. Don't be late.
You bet. So, yeah. Have a good one, man.
Thanks,
All
buddy.
right.
See you guys.
Speaking about the